welcome to the trade. Before we get into the technicals, a quick look at what traders are watching. And Yemen's Iran-aligned Houthis have said they'll impose a naval blockade on Saudi Arabia, further raising the threat to global energy supplies and trade beyond the Gulf. Iran had been pressing the Houthis to close the Bab el-Mandeb gateway to the Red Sea if the US continued to attack Iranian power infrastructure. Meanwhile, in the UK, Andy Burnham has become Britain's 7th Prime Minister in a decade and has pledged to deliver a new economic model. He unexpectedly named former Defence Secretary John Healey to be his Chancellor of the Exchequer, prompting speculation about a bigger increase in military spending. Benchmark British borrowing costs rose and sterling dipped on expectations the new Prime Minister would adopt a looser fiscal policy. In the US, Treasury yields rose as oil extended its recent gains, while Australian 3-year government bond yields rose to 4.59%. The US dollar is looking like this, the Aussie dollar back above 70 US cents. Let's get into the technicals now with Peter Maguire from trading.com, who joins me. Always good to see you, Pete. Let's kick it off with what we're seeing with gold. Is the upside momentum here potentially weakening a bit?
Well, it is a little bit, Juliet, and good to see you. It's the US dollar has certainly had a fairly good run over the last couple of days, and that's really interesting as far as where it runs from a technical perspective. You've got upside momentum is weakening. The real challenge is, can it break above its current levels, or is it going to be, contained in that 3,900 to 4,100 sort of handle? That's the issue. You've got RSIs and stochastics are flatlining. So really it's a bit jittery, and it seems to be just in a sideways sort of run at the moment. Nothing dramatic on either side to break out, and I think it's just a time to maybe not be in the market. In gold, that is.
What about in digital gold? What are we seeing with Bitcoin, Pete?
Well, 65,300 approximately at the moment. What it's had, it continues to shuffle sideways, and it's around that 64,000. Can it break above that 64,500, 66,000, or is it 64,000 going to be where it runs? The 20 and 50-day SMAs are bearishly converging around 63,700, Juliet. So technical indicators point to really a fading bullish momentum. And a break below 63,700 really is a test case for the 20 and 50-day simple moving average. So it could trigger fresh selling. Again, it's a little bit of wait and see what's happening with the Middle East and how that all rolls across from equities and, of course, to Bitcoin.
Let's talk about currencies now, Pete, because I mentioned a new British Prime Minister, the 7th in a decade. Hopefully this one lasts longer than a lettuce. What are we seeing with the pound?
It is incredible when you think about it, isn't it? 7 in 10 years. Wow. You've got, despite the recent pullback from a 2-month high around about that 135.40, it's currently at 134.30 sort of handle. US dollars rebounding, and the issue quite simply is, can it reclaim its 20-day simple moving average? The broader bias remains constructive as price continues to hold above a rising trend line. The momentum technical indicators remain positive, Juliet, despite easing from recent highs. It'll be interesting where Andy Burnham runs as far as his fiscal policies and what impact that'll have to naturally. Is he going to be raising taxes, dropping taxes? What's happening with North Sea oil? All of those factors are going to, I think, have a weighting very much on the British pound, certainly over the months ahead.
And therefore, then what's happening with the euro? Because you're saying it's facing a bit of a hurdle against the greenback.
Yeah, it is. Again, it's stabilised after rebounding from a 1-month low. It's running at about 114.16 at the moment. Recovery appears corrective. The pair is consolidating within a rising channel, Juliet. And while price action remains trapped within a cluster of moving averages around 114.40, the downside pressure is eased. Euro US dollar continues to trade below the declining 200 simple day moving average at 114.70, suggesting the broader trend remains bearish. What's happening as far as US, again, Fed policy, that'll feed into that. You've got the RSI and the MACD point to a fading upside momentum. and support, near-term range bias. You can talk about it all day, but again, we're waiting to see what bond yields produce in the US and, of course, in Eurozone, what's happening as far as Fed Chair Warsh and his views on whether we're fully baked in with a rate hike in September. They're all going to be major factors that are going to change, I think, the dimensions as far as euro US dollar, certainly in the short to medium term moving forward, Juliet.
And Pete, just a quick question where you see maybe the Aussie go, given it seems to be getting back above 70.
Yeah, maybe you're going to see a little bit higher. I'm worried about from a rate perspective here. What's the storyline? Possibly you might see, maybe 70.5 to 71 on a really sunny day. But at the moment, it seems to be very much range bound. I think there's probably, I don't like saying it, but possibly there's a bigger chance of Australia having a rate hike sometime in this second half versus the US. So let's just see what happens with the RBA and policy, and that'll really dictate where the Aussie trades against the US, Juliet.
All right, we'll wait to see. Pete, thanks as always. Have a good trading day. Peter Maguire there from trading.com. That does it for this edition of The Trade. Be sure to join us next time.